Hey, this is Matt from InvestiQuant. Today is Wednesday, April 14th, 2021, and today is the day of our auto trading webinar. We're going to be doing this webinar after the close today at 4:30 p.m. Eastern Time. If you have not signed up to attend this yet, please do. If you are at all interested, there's a link below the video that'll take you to this page that we're looking at here where you can put in your name, email, and any questions you may have about auto trading, and that will get you registered for the webinar today after the close. We'll be talking about our S&P 500 auto trading portfolio. We'll go over the ins and outs of that. We'll show you how you can participate in it if you would like to as well. We'll show you the results, which have been excellent. And we'll also have a special guest from our executing broker there with us this afternoon. Trent Wagner will be there to answer any questions about the execution broker and the execution side of auto trading. So that's today after the close. I encourage you guys to join us at 4:30 p.m. Eastern Time. The link is below the video. All right, let's hop into today's study. Today we're going to be looking at what has happened historically when you start getting overbought ahead of options expiration day. So let's set this up here in Discover. I've selected all four instruments. We're going to go into the indicator section for this one, and we're going to use three different indicators. We're going to say that the 2-day RSI is above 95, so that's our overbought reading we're going to be using. We're going to put us in a bull market, so I've got us above a 10, above a 200-day simple moving average as we continue to trade up near all-time highs in all of the instruments, some of them at all-time highs. And then lastly, I'm going to go into the market events section, and I'm going to say that we are 2 days prior to options expiration. So options expiration will be on Friday. We're 2 days before that. That can be found here in the active today section. In the day before events, we've got it 2 days before options expiration as well as the day before options expiration available here. I have selected that, and now we can hit view results. And here we go. These are results based upon entering the market long 2 days before options expiration when the market is overbought according to the 2-day RSI, and it is a bull market environment. So historically, 22 samples for the S&P, 24 for the NASDAQ, 35 for the Dow, and 14 for the Russell. So not a very common pattern that we're seeing here. Of course, this can only happen a maximum of one time per month since we are looking at 2 days before options expiration. And on top of that, it does need to be in an overbought scenario in a bull market. So it's not like it's got a whole lot to look at, but we do have 22 samples here in the S&P dating back to 2003. Of those 22 samples, 64% of those have closed above the open. The NASDAQ's been stronger, 71%. The Dow, 77%, quite strong there on the 35 samples. And Russell, 64%. Have closed above the open for the Russell. If we look at the average win, average loss, for the S&P, the average win has been larger. That is not the case for the NASDAQ. NASDAQ has a strong win rate, but when it's been wrong, it has had larger losses than wins. The Dow, the strongest win rate out of all of them, has a larger average win compared to its average loss, and then the Russell has a larger average loss compared to its average win. So the average moves are mixed, but all four of them have been more favored in this scenario. So hopefully you found this helpful. Good luck today, and we will see you after the close.